Kia ora, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. As we get everything you need to know in 90 seconds at 9 o'clock, with news China struggling to recapture that feeling things are still on the improve. Firstly, in the Middle Kingdom, anxiety is rising as the Delta variant of the pandemic is now at risk in half the country's provinces. It's not clear that the tough measures in some of them are actually stemming that spread, but they probably are limiting it somewhat. And later today we will get Chinese CPI data for July, and that is expected to be very low for consumers and remain very high for manufacturers. But we already have new data for China's exports that disappointed in July with a flat result from June and a year-on-year increase much less than expected. However, compared with pre-pandemic July 2019, China's July 2021 exports were up 32%. China's imports are actually lower than the prior month, but compared with July 2019, they're 31% higher. However, it is the recent tailing off that is grabbing the quizzical looks, reinforcing the thought that China's expansion is losing some momentum. Global shipping container rates rose again last week, even if only marginally, but it is a massive 370% rise in these rates in a year. Some routes, like Los Angeles to Shanghai, are still rising sharply, up 5% last week alone, but the route the other way, outbound from China, actually fell 3% last week. In the US, their closely watched non-farm payrolls report topped estimates at 943,000 added jobs in July, its largely monthly rise since the July 2020 bounce back. Their jobless rate fell to 5.4%. This is a good result, but it has to be noted that the data is from the first half of July before the Delta virus started to bite hard there. There are now 147 million people employed in their workforce, still 5.7 million less than when they started before the pandemic. Still, the pace of hiring has been picking up and wages rose again, up 4% or more than expected. The results for both May and June were revised up too. Wall Street greeted the data with little fanfare, but the US dollar has risen sharply and the bond market has bid yields higher as it senses that the US Fed is closer to its next tapering moves. Also revised higher has been the levels of US consumer borrowing, which grew 4.1% in June from a year ago. That is up 5.3% from June 2019. In Australia, their central bank has cut back its year-on-year growth forecasts. It was expecting 4.75% for 2021, but it now expects 4%. It did upgrade its 2023 forecast slightly, however. The US Treasury 10-year yield starts today at 1.31% and up another 1 basis point since this time on Saturday. And the price of gold took a bit of a hit over the weekend, dropping sharply to $1,763 an ounce, behaving a bit like iron ore. And oil prices are lower by 50 cents a barrel from this time on Saturday. So in the US, they're just on $67.50 a barrel, while the international Brent price is just on $70 a barrel. And the Kiwi dollar opens today just on 70.1 US cents. Against the Australian dollar, with little change at 95.3 Australian cents. And against the euro, we're also unchanged at 59.6 euro cents. That means our trade-weighted index starts the week at 73.2 and marginally lower compared with this time last week. We've been in a narrow range between 72 and 74 for our trade-weighted index for the past 10 months. We welcome your feedback on these issues. Leave a comment below or on our website. Kia ora, I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.